Good evening, everybody. Welcome. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First, we got to knock out our standard disclaimer. Let's go ahead and take care of that. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay, so here's the deal. Just a quick poll of the team here tonight. How many of you actually trade the Russell, RTY? Tell you what, before I switch over, let's come over here. It's probably too late to do that. Anybody, any RTY traders here? Or you're looking at RTY, or you're considering RTY, or you looked into it and you're thinking about it, or trade other things and you keep an eye on it, or whatever. It can be smoother than. Let me just show you something real. Let me bring up the CME group site here. For those of you, we have some new folks and some people visiting, so let's just take 2 seconds and bring everybody up to speed real quick, okay? Let me turn this on screen 4 real quick here. Okay, so if you go to cmegroup.com, this is the sort of the central location for futures. Everybody knows that, cmegroup.com. Go down to about the middle of the page where you're talking about the equities. Now, the main ones for years was obviously the E-mini S&P, mini NASDAQ futures, NASDAQ 100. YM, of course, the mini Dow. We haven't for a long time, the mid-cap 400. We haven't the EMD. And up until, I'd say, what was it, a couple, 3-4 months ago, the Russell was traded under the symbol TF and was over on ICE, which is a different exchange than the CME Group exchange. And so recently what happened was that the CME Group took the Russell contract in. And it goes by the ticker of RTY. Now, right here, this doesn't look like good volume. Here, S&P 500, of course, is the most liquid contract of all the equities. You got 8,000 contracts, 2,000 on NASI and 2,000 on Weimer. And RTY only has 158. That's because this is after hours. Now, during the trading session, let's go ahead and click on this. I've seen this get up to 10, 15,000 contracts, 20,000 contracts. So it's becoming much more liquid. It's still less than the others because they're actually going to keep the Russell TF trading on ICE through, I think, June of next year. So what you are finding is this RTY contract is starting to ramp up in volume, and the spreads are looking pretty good. And let's get over to a chart. It tends to trade well, more than a little bit smoother than NASDAQ, but it doesn't get the movement. Now let's look at today. Let's look at the past couple of days. We're talking about RTY, Russell, $5 a tick, 10 ticks per point. And let's start off with the beginning of. Everybody see the RTY chart, by the way? Anybody not see the RTY chart? Mindy, I see you just came in. You couldn't log in for 5 minutes, Mindy, because I hadn't opened it up. I was having some technical problems here, but we did get it. We did get it worked out. All right. So what I'm going to do is I'm going to look at today, and then we're going to go backwards for a couple of days and see how we can observe the Russell for the first couple hours in the morning, and then talk about how we're going to trade it tomorrow morning. So 6:30, let me just put a couple lines here real quick. So 6:30 is right here. So the equity market opens right here. And I think Gary opens the room at 5:55. So I want to say that was right somewhere right about, let's see here. Let me open this up a little bit. 5:55. Hey, just for those of you that come in early, you early birds that come in when Gary opens up the, he used to just show the oil chart, and I'm not in there that early. I come in like 6:15, 6:20. I come in about 5-10 minutes before the equity opens, so I missed that crude pit opening. But does he show all the? He shows all the charts now, right? All 6. It's not just oil anymore. It used to be just oil. But I think a few months ago he started showing them all. Is anybody in there? No? Yeah, he shows all of them? Walter? Okay. Yeah, that's what I thought. All right, so let's look at what you would have seen when you logged in this morning looking at RTY on the this is of course all of our indicators here, predictors, the bands, the mid band. So at 5:55, 6 a.m. when you logged in, the market would have been up here. So you were waiting for a retracement. And sure enough, at 6:30, we got a pullback right around the mid-band here that I think we called out and took in the room, as I recall. Remember we were saying when it was up here in the pre-market session, we said we want to see a pullback. John, you remember that? Anybody remember that? We said it was up here. We need to see a pullback around the mid-band, and I think we were looking for 96.40 or 96.60. And sure enough, we got the trade right here. Here was the long trade right here. John, you were in the room. You remember that? Some of you, I see some of you remember that. So there was a couple spots to get in. If you were more aggressive, you could have done a bar close or a quick little box like here. If you were more patient and you wanted to throw a little bit slightly larger box around it, it would have looked more like something like that, perhaps. So you were looking for a close basically above here, which you got right on that bar right there. So here was the first long trade on RTY this morning, right here, and it was pretty quick. I mean, you're looking at about almost 3 minutes into the session. So it did sit here for a little while. There's plenty of time to get in it, and then you got this nice quick pop on the long trade right here. Anybody take that? Show of hands. Waited patiently for the pullback. Walter, you caught it? I see quite a few of you caught that. Yeah. Now, if I was to I'm not going to do it. I don't want to get distracted from this. At the end, I'll do it. I'll bring in a NASDAQ chart, and you can see the difference between the two. Now, granted, if you like high volatility and you like big movement, there's no question about it that NASDAQ has it in spades, right? I mean, it's just the movement of NASI is usually twice that of the Russell. However, if you trade a NASDAQ, you know it's very whippy. It can go up, it can go down, it can pull back in your face 20 ticks real fast. It's just a whole woolly beast, different bundle of an animal. And then we had another bounce right here. You got a scalp out of it. This was long trade number 2. And then she sat here on this mid-band with this box right here. I remember this trade because I took it. Here you're about 6-7 minutes into the session, and I believe at the time, you know what? Tell you what I'm going to do. Here's what I'm going to do. I'm going to just give me 1 second, please. I'm going to put a NASDAQ chart tucked in the corner behind it so I can use it for reference. And there's a reason for that. I'll show you in 1 second. Because you can use and I do this too. I think Gary does too. You can use the NASI as sort of a quasi-leading indicator for what you might want to do on the Russell. Let me go back and look at 636, 637 on NASI because I think it was already selling off at that point. Yeah, we wanted to let that box go either way, Walter. That's correct. Stand by. I'm loading up a NASI chart. Give me 1 second here, please. Let's get back to the open just for a reference point. I'll tuck it in the corner on the left. You can trade it at the same time if you have, the skills to do that. If you don't, then I'd suggest picking one or the other and just watching one. And let me go back and show you exactly what I'm talking about here because you can use NASI sometimes as a leading indicator. And here's how I'll share with you how I do that. And let me do a split screen. Hold on 1 second. Okay, I'm trying to pull them both up. Here we go. All right, here's a little split screen. And let's scrunch the data on RTY real quick, just for simplicity's sake. I'm going to take the predictor off just for the moment, so we can see the bars just a little bit better. And we're going to tuck this in over here to the left. All right, so 630, 631 was over here on NASDAQ. This was the open on NASI, and let's just level set some expectations, so we got a good comparison for the sake of a good comparison here. This box on the Russell, right around the open, roughly equates to these bars on NASDAQ. So take a look at this box right here. This was our long box, a minute or two into the open. And the first 2 minutes on NASI looked like this. 630 was right here, and 632 was over here. Can everybody see that? This box on the Russell, right here, on the right, roughly equates to this box on NASDAQ. A little bit of a difference, huh? I'm just kidding. It's a huge difference. This one has probably, I'm guessing maybe, I don't know, 6, 8, 10 bars in it, maybe a dozen tops. How many bars are in this one in the first minute and a half of the market being open? I don't know, 40 probably. Plus you had this sort of funky, and this is what I was talking about when we opened the webinar here, is that you get this funky sort of jolt. You know, right at 6:30, you get this sometimes with NASI, right? In fact, 6:30 actually started right here. And 6:31, the first minute didn't even end until here. So technically speaking, all these bars printed in a minute or less. That's a woolly beast. Huh? That's a woolly beast. So by contrast, this is what you got in the first minute to 2 minutes of the Russell. Much, much smoother. Now, interestingly enough, and this is what I wanted to show you, you got the same long trade. Now, this was a huge box. I can't recall if we called or took this trade, but you did get pretty much kind of the similar breakup long, although it wasn't as clean as here. Here you had one bar up and then off you took. Here it chopped around for about 6 bars, and then you got your pop. So that trade roughly equates to roughly that trade right there in approximately the same time frame. Now here what happens is this pulls back at 6:32 right here, gets a little bip up, and then starts to sell off. So let's look at exactly when the sell-off started on NASI. 6:33.30, just before 6:34. 6:33 is when this box broke to the downside. Okay, you might actually got sucked into a long trade there, but then she flipped and started selling off right at 6:30, slightly a few seconds after 6:33. And obviously you can see down she went. Sell programs kicked in, and you know, you're getting a lot of the part of the reason you see more, I don't want to call it manipulation, but high frequency trading, which tends to somewhat manipulate the market. So it's sort of a, you know, sort of flipping the terms there, but it's because there's much more volume here. If I was to put volume bars up here, it'd be probably 3 or 4 or 5 times the volume of RTY. RTY is still a relatively new instrument, so the volume is considerably less. So the big boys haven't turned the scripts on this puppy yet, and that's why it's so much smoother. What I'm trying to tell you is that here at 6:33, when NASDAQ was selling off, where was the Russell? Here's 6:33 on the Russell right here. The Russell was just peaking out. Here's 6:33, 6:33 and a half. So What was this market over here on NASDAQ telling you about what could possibly happen over here? That's a question. Because here, by 637, well, you can make the case that the breakdown happened just before 638. By the time that happened, 637, NASDAQ was all the way down here. Here's 637 on NASDAQ. Here's 636. Here's 637. Here's 638. It's almost getting a double bottom. What was this move fully 3 to 4 minutes ahead of the Russell portending of what might happen here? Follow the leader. Looking for shorts. Let this trade either way. There's a strong likelihood that this thing's going to break down. And sure enough, it did. It followed it right down. Everybody see that? I mean, look at the difference. This is 643 by the time this move happened, and 643 on NASDAQ is all the way over here. Let me just, I'm going to do just a few of these so you really can grasp the huge, enormous difference in volatility magnitude between these two instruments. Here is 633 to 643 on NASDAQ between these two lines right here. Okay, and here is 633 to 643 on the Russell. 633, it was starting somewhere right about here. And 643 is right here. Huge difference, huh? I mean, you could make the case on NASDAQ by the time that this one breakdown occurred on the Russell, which technically would have filled short on this bar right here. I remember there was some slippage. Okay, that's the other thing I got to give you a little bit of heads up on. Due to the light volume sometimes on Russell, you know, sometimes you're going to get more slippage. With NASDAQ, you're going to get better fills. And the moves are going to be much larger, right? You can see that this move down is easily twice as big and was actually broken into arguably 2 or 3 shorts. You had another short. You had the short here. You had a retracement just shy of the midband that I believe we called out here, which did almost what appeared to be at the time, more or less kind of a double bottom. Came out one more kiss. Another opportunity to get in right here. Second shot at the short, yes. And then you got another move down. Blammo. So this breakdown, this retracement, this breakdown, this retracement, and this all occurred in the span of that move on the Russell. All of this happened in the same time as this. One move on the Russell. Are you starting to get a sense of the enormity of difference between the volatility of these two instruments? Can you see it? Can you see it's right here in front of you? I mean, it's incredible, the speed and difference between NASDAQ. But the important takeaway here also is the fact that the NASDAQ led the Russell down. And we knew at this point, you know, with the NASDAQ already being way down here by the time we got this box, that there's probably going to break. Walter's saying that's exactly why I moved to the Russell from NASDAQ. Yeah, I'm not, and please don't misunderstand the purpose of this webinar here tonight. I am not advocating that you, whatever you're trading right now, you chuck it out the window and go trade all the Russell exclusively. That's what I'm not saying that. If you have other instruments that you're trading and you're doing really well, whether it be Weimar, any of the currencies, gold, crude, whatever, even NASDAQ. You know, if you're doing good on NASDAQ, keep trading it. That's not what I'm saying. What I'm saying is that if you're looking for a good instrument to try as an alternative to NASDAQ, RTY is a good one for you. All right, let's go ahead and play this out for the rest of the morning. So here we're coming up on 7 o'clock. NASDAQ got a little spike up. Let's look at the same spike on the Russell. We're looking at about 644 to 645. So just to keep the orientation in place so we're all kind of tracking together, now I'm going to start using circles to help visualize this. This area here, time-wise, which was a trade, a short rollover from the mid-band, obviously, that I think we tracked and called in the room, was roughly equal to about this right here. So you can see the Russell remained much weaker, and the depth of the retracement was not very deep. It took you back up, just through line 2 in the stealth line, and then went down to a fresh swing low here. 650 on Nasdaq. So let's keep our orientation correctly going here. So we're all kind of on the same page, and I started making the Nasdaq chart a little bigger because there's so many bars. It's ridiculous. 650 on the Russell was actually right about here. Well, somewhere more or less right in here. And 650 on Nasdaq, well, let's call it 650, 651, so we get about on the same page here. That same spot time-wise, of course, was right about here. So just that we're all on the same page. So 643 to 651, 8 minutes of trading was this on Nasdaq. All those bars, all these retracements, fully a shot back up at the mid-band, fresh swing, shot back up at the mid-band, fresh tanking lows to 651. All of that occurred at the same time that this happened on the Russell right here. NQ equals Nostradamus, Mario. I don't know if that could be construed either way, good or bad. In fact, as I recall, we were calling out stops on the Russell that actually kept you in this trade all the way down. So all the way down, you were banking money on the Russell. Whereas if you had tight stops trading Nasdaq, you could make the case that this could have been broken into 1, 2, and possibly, if you didn't catch it, even 3 short trades. 1, 2, 3. But that's the way Nasdaq rolls, right? That's the way Nasdaq rolls. These little bursts of thrust in the trend direction, of course, which was down, if you want to think of it this way, and the depth of retracement equate to basically kind of what you see here. It's much more muted. It's softer and much easier to deal with and moves much more slowly. Yeah, that retracement there was more or less this retracement right here. Let's move on. Everybody getting the point? You see this? Hey, a quick show of hands. Let me do a quick poll of the team here. How many of you are going to check out the Russell in the morning? RTY. Would you rather deal with this or this? Now, granted, it's not giving you the movement that this is. Okay, there's no question about it. I mean, here, let's look at the numbers real quick. Let's look at the numbers real quick as a team, as a team. I see quite a few hands coming up. Yeah, I'm going to be checking out RTY in the morning. Mario, Peter, Mindy, Chris, Doug, and Jim. Good. You can make the case here that your rollover was up here around 72-ish, and by the time she was done at 651, she was down here. So you're looking at 20. Was that 20 times 4? 80 ticks. Just so you can appreciate what we're talking about here. This short was 80 ticks here. Whereas in that same span of time on the Russell, you're looking at, peaking out around 96.20, and she got down here to 94. This move here was about 20 to 23 ticks. 1/4 of the move here. If you were to equate tick movement, and just put the volatility. When I say volatility, volatility refers to the nature in which the price moves, meaning that some tend to be more spiky, and the retracements tend to be more volatile and deeper, and the thrust moves are more are quicker and longer and deeper, and that's why you see Nasdaq moving like this. This is the high frequency programs kicking in. This is the sell programs manipulating the price up and down, pushing it around. Over here in the Russell, we don't have that yet because of the low volume. So here, this initial drop on the Russell, we got filled here maybe at I don't know, 90, 98.30-ish. Give it some slippage, 98.20. And then this little spike down here got you to 95. So this was about 30 ticks. That first spike here on that box. Whereas over here on NASI, this box gave you, let's say you got filled at 85 short, right here, right? And that initial spike took you all the way down to 84. 11 times 4, 44 ticks. Pretty much in every case that I've ever seen, NASI is going to move at least pretty close to 2 or 3 times movement of an equivalent. If you took almost the exact same move, this is going to be 2 to 3 times bigger from a sheer tick point of view. But here again, you have to deal with the spikiness of it. Peter pointing out that some days in the past week, RTY and NASDAQ were divergent. That's true. So I have to issue a quick word of caution on this. The follow the leader thing doesn't always work. I can't give you an exact percentage of time. It's pretty high. I'd say it's probably fully 60 to maybe 70, 75%. But there is that slight, 20, I'd say 20, 25, 30% of the time where, in fact, let's continue on here and see if we can find that a little bit, because I think the Russell bounce started heading up and NASI went into chop. So there is divergence. Yeah, you can't just, this isn't just carte blanche where you come in here and say, oh, NASI's tanking, I can just go in here and short the Russell. All the logic and trade entry techniques, the tools of entry on the Russell are the same, notwithstanding what NASI is doing. Many, many times they'll follow each other and NASI will lead. But if they're completely divergent, then that's off the table, right? Mario is saying here, I can still make my goal each day trading RTY, and the smaller movements are okay because sometimes I get at least 20 ticks. Well, that's true. Yeah, I mean, here this initial short was around 30. You got another, you maybe got, by the time you got in and out, 15 here. And then here's another box on the third short. Oh, I remember this because I was in this. I distinctly remember this. Okay, here's the third short right here. And then it was Eddie. Is Eddie in here tonight? I think it was Eddie. Is he here? Let me see if he's here. Are you here, Eddie? There you are. He so graciously, does anybody remember what he said? He said, watch out. In fact, it was up here. I think that was probably fully 5 or 10 minutes before we got down. We were sitting up in here somewhere, and Eddie called this out. He says, watch out. The overnight swing low on the Russell is, and I remember this number, 91.90. Anybody remember that number? He said, watch out. You're coming right down to the overnight swing low, 91.90. You might want to think about covering down there. And sure enough, we were short from that rollover, right? And we were tracking the stops, remember, in the room? Tracking the stops, tracking the stops, tracking the stops. And I think I got popped out on one of these bars right here. Yeah, I think only one of these bars I think got me. In fact, I think there were some people in the live room, and some of you might have been in here, that actually bought this, flipped it, and went long here on that bounce off that swing low that came literally like within a tick of that low. Remember? Anybody who was in the room, remember that? Some people actually flipped and bought that, got long here, and look at that pop. Eddie, you bought that down there. Good for you. Covered and bought. Most excellent, because it ripped. Look what it did here. Look what it did. You could hit that swing and then blammo, short covering, big time. Let's look at that same time frame on NASI, 7:10 to 7:13 would have been over here. Now, this was where your divergence started to kick in even more pronounced. If you recall, somewhere right before 7 o'clock, I distinctly remember this. I was stopped out of the NASI shorts, and I was watching this going on right here. Okay, you see this oscillation like this? Here, let me extend it a little bit more so you get more of a flavor for it. Technically speaking, from a trading point of view, on this NASDAQ chart, these were, anybody know the name? Do a pop 5-second quiz. What were these trades right here in terms of our definition of trades? There's a name for them. And let me help you out. Technically, at this point of time, right before 7 a.m. on NASI here, the trend was still down, yes? Trend had not changed yet. It was still down. Those are phantom. Mindy says, I call them scary. Yeah, that's like a haunted house at Halloween trade for you, huh? For some of you, not just you, not singling you out there. It's anybody who nervous about those. If you recall, I stopped calling NASDAQ in here. I stopped taking trades in here. You know, I'm not afraid of phantom trades. I'm not, personally, truth be told, I'm not really a big fan of them myself. A lot of them work out very nicely. In fact, look, this one came to the mid-band, broke it. And this one, if you fought through a little bit of the chop and you could put up with that, went down to actually a fresh swing low down here. So, you know, in terms of if you're looking at it from a technical point of view, these two phantom shorts actually did work out. And it was not a trend change, and you were still shorting. You should have been shorting the market up here. But I understand why a lot of you don't take them. We don't have to go down that road. Anyway, let's go over here in advance, because I think by, you know, as we're looking at the NASI chart between 6:53, 6:51, and 7 o'clock, that time frame would have been more or less this area right here. Let's go over here too. Let's call it 704. 705, 706. Now here's 706. So let's frame this out. Let's continue to frame this out so you get a flavor for what's happening here. 653. Yeah, okay. So all of this movement on NASI from here to here is more or less this movement on the Russell. Right here. All of this with these phantom retraces and the pull down and the phantom retrace and the pull down and the spike and the whipping over here to 705, 704, 706 is from here to here on the Russell. Just an incredible difference in volatility here. See how much smoother this is? This was a beautiful continuous short that went on down to that fresh swing. Never popped through stealth, never came through line 2. We comfortably trailed our stop down here, remember? We were saying trail your stop, keep it here, leave it a little bit loose, and then when it got done, it was coming down to that 91.90 that Eddie called out. We said, hey, you know, crank that thing down. Don't let it come all the way against you, and then it popped it. Whereas over here, you were looking at, you know, one short entry, stop out, another short entry, stop out, and then this gets into some violent whippiness that I don't even want to trade. Yeah, now, who's that, Jim? Jim S? Jim, that's a good point. I think we're a little crowded here to try to get a YM chart up here. But lately, I don't know why, Weimer's kind of her own little thing over there. I mean, mainly because I think the Dow's hitting fresh all-time highs, so she's kind of marching to her own drum. As I recall, in this sell-off, Weimer was actually still going up for most of it. I mean, we can look at a WYME chart before we wrap here, but if you want really low, I mean, if you were to rank them in terms of volatility, coming back to the CME group, talking about these equity instruments, I would go as follows. I would say ES is by far the slowest instrument of all of them. If you want to put a trade on and go to sleep for half an hour, ES is your instrument, right? Next up would be Weimer. Slightly more volatile than ES, but not quite as much as the Russell. Next in terms of volatility would be RTY. And then, of course, the most volatile of the equities, I would say by far, is NASI. So I would rank them in that order. And so yeah, I mean, if you're looking for something to trade in addition to RTY and you don't want to do NASI because it's just too whippy for you, Weimer is another good alternative. It's even slower than RTY. Yeah, that's a good point. That was a good point, Jim. Well, I'm showing how to make the money, Greg. He's asking. The point was to talk about how we make money on RTY. I think we've shown. Here, let's go back in case some of you might come in late. I see some folks coming in late. Yeah, the topic here is how to make money trading the Russell. And so just to recap, going back to the open, here's 5:55 pre-market session. We had a long trade here that worked out perfectly right at the open. Right? Long trade here, short trade here, box, we talked about it. You had, technically speaking, another long box here that made money on a scalpy that stopped out. We reboxed it here, let it go either way because I was using mainly the NASDAQ as a reference. We can get rid of that if you find it bothersome. And then here was a short that worked out. This was one continuous trade with a loose stop, or there was another entry on this slight retrace. Depending on how tight you were using the, whether you're using stealth or line 2, you could have stayed in through this retracement, and even possibly that retracement if you were using the midband. But here was scalp trade. Here was short trade number 2, down to here, and here was short trade number 3. So by 7:10, 7:12, let's see what we had. We had a long trade here that looks like it made about 98 to, I don't know, 20 ticks. Maybe got 15, 20 ticks there. We got short here at 98. And let's say you didn't get stopped out until 95-ish. So this would have been about 25, 30 ticks. So now you're up 45, 50 ticks. Yes? Long one, short one, or short 1 and 2. And then you had a third trade here that got in, I don't know, maybe 95, 50-ish. And maybe you stopped out around 93. So there's another 20, 22 ticks. Between 70 and 75 ticks on what could have been 3 or 4 trades that all made money. Times $5 a tick, you're looking at somewhere between $350, $400 on one lot. 2 lot would just do the numbers. 1 lot. I would submit to you that almost no heat on any of these trades. They follow through. There's minimal volatility. You could have trailed the stops very comfortably. You could have you could have traded 1 or 2. You could have scalped on every one of these and hit targets, and then had runners. And you could have arguably been done trading by 7:15, the Russell, and been up very nicely. And you didn't have to take any trades after this on 1 lot. And you'd be, some of you I know have goals that are $350, $500. You could have been done with 2 lot. You definitely would have been done. Let's do that. Let's go ahead and continue on. That is a good point, Greg. Let's stop talking about NASI. I think everybody sees how that volatility works. Let's go ahead and move forward and play out the rest of the morning on Roosty Bird. All right, I'm gonna make this more interactive. You know me, I like to make my webinars much more interactive. I've just been jawboning it up here. I'm gonna advance the Russell chart, and when you see a long trade set up, you type in the word L. Ready? So we're gonna go after 7:10 and play this out together. And don't look at it on your own chart. Don't cheat. Don't load this up and take it on your own chart. When you see the long trade set up, and I'm helping you out by telling you it's a long. Ready? How many of you want to get long here? Any takers? No? All right, let's advance the chart. No. Okay, I see a lot of no's. Okay, good. That's good. This is the thrust, right? We all know we don't get in on thrust. All right, here we go. Just type in an L when you feel that the long trade is set up and you're ready to deploy the tools to take the long trade. Ready? Okay, here we go. Go bar by bar here. Here we go. Right where it's 7:15, 7:16. Okay, now we're at 7:30. Room still open. $7.35, $7.36. All right, now I'm going to help you out, everybody. Again, it's still got a good group of people in here tonight. I'm going to help you out in all fairness because Gary did put a line that helped us make this decision, and he put, if you recall, he put it right here. Anybody remember that? You remember the number 96? Remember? In fact, I think he put that in as it was doing this. All right, let me continue on with the chart, and we're working together in real time. You're calling out the long trade when you feel it's appropriate to do so. Here we go. All right, time's up. So let's go back and look at this. This is the, you know, especially on the Russell, this doesn't happen very often, but occasionally it does. And this was a case where the short covering was so strong here that it never, I wanted to so much see a pause. And many times you've seen on other charts, it'll just sort of pause right in here. It'll pause, time for a little box, and then up you go. Now that didn't happen today. That didn't happen today. It just, you know, in the 5-10 minutes after that popped, if you didn't reverse it and get long here, then you just simply could not chase that. You just couldn't. There was just, in fact, I remember sitting on my hands in the room being extremely frustrated that the thing was running away without us. But you can't, we know from experience that we can't chase it, right? We can't chase it. As much as you want to jump in, you can't. There has to be some kind of pullback. And you have to be patient and wait for it. Now, what you got here, let me show you. Now, I know we all wanted to see this thing come back to the mid-band. I know I was thinking that. I'm thinking, man, one little dip down into here, and that bips anywhere near there, and I'm all over that, right, to get long. But it never got down into here, did it? But I want to show you something here. What was it doing right here? What was Russell doing right there at 96, 96.50? What was it doing here? What do we call this? Here, forget about this box. That never happened. Let's just look at this. What is it doing here? What is this market? Any market. It doesn't matter. Oil, gold, any market that's doing this. What is it doing here? Building support, consolidating. I don't know if I would call it chop. Building a base. Have everybody ever heard that? Building a base, right? So what's actually happening here in the market is that this first burst is short covering. We all know that, right? And then short covering is not sufficient to move a market higher. There has to be some amount of buying that comes in. Now, I would submit to you that this thrust piece was buying. This was your buying coming in. Buy programs, some small buy programs kicking in. Market participants who didn't catch that swing are trying to get on board here, and they're pushing it up. Now, in order to move higher, the market has to find a higher level of support where buyers can then reassert themselves. So that's essentially what you're getting right here. It's building a base. It's building a base. Remember, we were sitting in a room. We said that 96 is holding. It's not getting the mid-band. We would have put a box on that. We're looking to buy that support. Remember? It sat here for like 10 minutes. Remember? It was held it. Every time it kissed it, it held it. Bipped up, kissed it, held it, kissed it, held it. And then sure enough, There's your follow through right there. So that was your final trade in the room right there, that long trade right here. Many people got it. I got it. I know Gary got it. There was your long trade right there. Into the, let's see where it stopped out. I think we closed the room right about in here. So I think it got me on one of these bars. I don't remember exactly. So you missed, you missed a big chunk of the trade over here because we didn't get the first leg up. It never paused. We wanted a pause here. We just didn't get it. We saw the short covering. We saw the rally kick in with the buying, and all we had to do was patiently wait, and it sat on this 96. And like I said, looking back on it, I know we were gunning. We wanted this down here. We wanted a mid-band box. I wanted a mid-band box. I know everybody wants a mid-band box. Sometimes it's just not going to give it to you. If the buying is sufficient to push this thing up, it's going to get a higher base, and that's exactly what it did here. Yeah, Mindy, I know I hear that a lot from many traders, and it can be frustrating. If your go-to trade is mid-band boxes, and it just never gets there, I know that can be frustrating. I understand that. The one way you can counteract that is turn on your OT, turn on bar close up, you're in, throw a box on it, you're in. You could put a ray or a line on it, and you're in. There's many different ways to get long here. But here's the thing that could alleviate some of your fear. When you're filled long on any one of these bars in here on this support level, your initial stop is not going to be 12 ticks. It's not going to be way down here somewhere. Now, OT will put it down there. But where would you put your stop, your initial stop, if you're filled long on one of these bars here? Okay, let me give you some choices. OT would put it down here. Let's say your default stop's 12 ticks. I'll give you 3 levels for initial stops filled long off the bounce here. And we'll take a quick vote before we run out of time here. We'll do an ABC. We'll take a vote from the team. So you're filled long off of 96. Any one of these bars closed up. Is your stop located at A, here, B, just under the midband, or C, let the 12-tick initial stock from OT just sit down here? A, just under 96, a few ticks underneath. B, just under the midband, or C, the initial 12-tick stop from OT. Quick vote. We're almost out of time. Cast your vote. On this trade here, this final long trade on the Russell, where would you put your initial stop? Ooh, let's see. We're counting A's. We got Mario, Michael, Joseph, Peter W, Marie. Hey, Maurizio, I didn't see you come in. Ciao, Bella, my friend. Lauren. Well, it's a pretty good mix. We've got a B vote from Jay, Adam, Chris, a couple other B votes. It looks almost tied. I like A, but I've been stopped out by putting it too tight many times. I would probably go with B. All right, so let's blow this up. Yeah, this is a very good point, and we should touch on this before we wrap this up. You got to be prepared sometimes to take a little heat on some of these. Now, there's two schools of thought. If you put it super tight here, just under 96, expecting 96 to hold, and you get a situation where, a bar closes down, I don't know, closes down maybe a tick or two, just sort of wicks down into here, and then comes real sort of close to that mid-band there. It just kind of wicks it a little bit. If you're super tight on your stops, that scenario is going to take you out. And then you to get back in, you're going to have to do a market order or rebox it or do some way to come catch this move, okay? However, if you can tolerate a little bit of heat, heat meaning let the market pull back a little bit, and some bars start to do this, which is quite possible they could have done. Now, this is all hypothetical, but it could, you've seen this before, right? Bars start doing this. where they're just sort of wicking that support level, but the mid band is holding, right? Initially, when you enter the trade, you want to give it some extra wiggle room. I would say, in my opinion, B. Now, it all depends on where you got filled. Now, what do I mean by that? It's different if you got filled at 737, 738 on the first trip down here. I didn't. I didn't get in until much later. I didn't get in until way over here. I let it sit there and just base and base and just base. It sat there for 10 minutes basing out. And when this last group of candles set up, this is where I got in. This is where I pulled the trigger right over here. So it was different for me. What I mean by that is I didn't have to sit through all this and wonder where to put my stops through all that. You know what I mean? I fortunately had the patience this morning, just let it sort of sit there. So, I mean, I'd say either A or B are both good answers. A is tight, but if you got wicked out, you'd be faced with getting back in. B could have been a scenario where, you know, wick, you're still in, and then bam, you get the trade. Yeah, so it's a timing issue around your entry, how much you had to deal with here, and where you actually got filled. Good. So let's take a quick peek. What did we said on the first 4 trades, we got what, 70, 75 ticks approximately? Less commission, of course. And here maybe you got, you know, I don't know, 97-ish fill. And let's say you got out at, I don't know, 99 something and change, 20, 22 ticks. Does anybody notice a theme here on the Russell? With these moves, has anybody noticed a theme? What are you seeing coming up over and over again with these trades? What number have you seen probably 3-4 times in the course of this webinar on each of these trades? What numbers do you see keep popping up? 20 to 30. Good. Seeing who's paying attention. 20 to 30. Why is that? Because what I've noticed on the Russell, when you get up, when she pops 20 to 30 ticks, 20, 25, 30 ticks, you're probably going to get some kind of pullback. You're going to want to tighten your stops up and look at getting out, particularly if you're at support and resistance levels. So you had 1, 2, arguably 3, 4. You missed this, 5. 4 or 5 trades, and I think the total would have been somewhere between 90 and 95 ticks. Depending on your actual fills, less commission. So if you took all those trades at $5 a tick, you know, you're probably up somewhere between $400 and $500. And I know, you know, many of you have said that that's pretty in the sweet spot of your goal for the day. You know, if you doubled up, you know, if you did 2 lot right out of the gate, you know, you could have popped these first couple, and you maybe didn't even have to take that long trade. You know, you could have been at your goal here by 7:15. All right, listen, I gotta wrap it here now. I'm gonna go ahead and stop the recorder. Any final questions?